Hi everybody, it's me, Greg Manarino. How are you today? Alright my friends, let's take a look at what's going on here. We found out just yesterday that Italian debt was downgraded. The unemployment in Europe is at all-time record highs. Here in the United States, this jobs report that came out last week, a complete farce. We understand this. It's just so easy to figure out what's going on here. Forget about the numbers of jobs that they say they've created. So much information is omitted. So just keep your eye on this. The labor force participation rate. It is at historic lows. Now, again, our policymakers here in the United States are really going off the deep end, trying to make people believe everything is just fine here in the United States, and we're immune from the issues that are affecting the world. But let's delve a little deeper into this. What have we been seeing over the past few weeks? We've seen interest rates begin to creep up. Something I've been talking about for a very long time. Now, if you've been paying attention to the mainstream media, they're trying to spin this, and I'm telling you, I almost fell off my chair this morning. They had several guests on their show talking about how they believe the Dow or the overall markets are going to rise with interest rates. Really? Well, let's put another perspective on this. The only reason why the overall markets have been rising is because of these zero or near zero interest rate policies, allowing the institutional investors, something I've been going over so many times, to speculate in the market. As the cost of money, cash, rises through interest rates, there'll be less speculation. It will put pressure on equities, which will sell off. I've been talking about this for quite a while now. And again, until something drastic happens, we'll see by the end of this week how this goes. I am going to maintain my position. I am still short this market. I'm also short the dollar. I am long crude oil, and I'm obviously long metals, the physical stuff. I own a substantial amount of this stuff. Now, what I really want to discuss here is what I see going forward here, and let's try to put a perspective on this, and maybe we can start a dialogue between all of you out there in a discussion down below. As interest rates begin to rise, and again, we're seeing this now, and there are some out there that are predicting the 10-year to go up much higher by the end of the year. I cannot envision a scenario where this is going to be bullish for the overall markets. And I think it's a spin that's being put on it by the mainstream media outlets. They are seeking out these kind of people to, again, play into their game. We don't want to play their game. We're trying to get out of their game. This is why we're getting away from fiat currency, getting into hard assets. Now, as interest rates continue to creep up, something that not just myself, many people are talking about here, it's going to, again, put pressure on equities, which will sell off. Again, this cash does not go to money heaven. It's going to go someplace. And right now they're talking about the great rotation. I mean, I don't even really come up with this stuff. That is, they're saying that cash is coming out of the bond market and into equities, and that may be happening at this time. It does seem evident, but this scenario cannot continue because, again, as interest rates rise, less speculation in the market will go down. The cash here will look for a place to go. And again, I've been going over this, and I went over it at length in my book, The Politics of Money. We'll go into commodities. So what I foresee happening here as we move forward, and again, this is not just me. This is a lot of people have been talking about this, is a new bull run in commodities. Now, for those of you that know me, again, on a personal level or follow this blog, I don't follow the crowd and with regard to investing and trading, and it does get people rattled from time to time. But I always look to take the opposite side of that trade. Right now we understand